everybody. I'm Jason, the Wizard of Ops, and with me, as always, is Jay, aka Dark Matter. Jay, how you doing? How was your weekend?
I can't complain. I had a pretty good weekend myself, Wiz. Nothing much, but how about yourself?
It was good. It was good. Son had a wrestling tournament. But yeah, overall, it was a good weekend. NFL playoffs started too. There was some pretty good games, ones that I stayed awake to watch for anyway. But but anyway,
until that last game, right? That last game was just not so fun.
I
It was
didn't even
a
watch
bit
that.
brutal.
Which was that the Chargers or something?
Yeah.
That one.
Yeah.
I didn't really watch much yesterday, but when the Giants are out, then I kind of lose interest. But
They were out a long time ago.
They're out the first half of the first game. All right. All right. So this is OPEX week, man. Happy OPEX week. And what you
made it to another one. We made it to another one. Congrats. So yes, you definitely nailed it. In terms of this week, we've got OPEX, but let's just jump into those event catalysts because we've got a couple of them to just call out. So on the data front, obviously CPI, that's tomorrow, reports into tomorrow. That will be a big one. We've got core PPI, retail sales as well this week. And then obviously we also have, some jobs data, usual weekly unemployment claims here as well. So not only do we have those event data catalysts, but let me just scroll down here because I forgot to paste this at the time. But we also have finance earnings. So Tuesday JPM reports, that's a big one. I like to keep tabs on the airline industry as well, so I'll be watching Delta. I don't trade it, I just watch it, see how the consumer and the business travelers are doing. So that will be another one. But then obviously earnings continue for the banks going into Wednesday. So we've got Wells Fargo and Citi and then Bank of America. And then here's an interesting one on Thursday for the semis. You've got TSMC also reporting. So there's the obviously report overnight, just for those who are not aware. So you might see some action kind of occur overnight as their earnings come out. But then you've got later in the morning, Morgan Stanley, Goldman Sachs, and then BlackRock as well. So if I would be lying to you if I said that this is not going to be maybe a catalyst driven week here, but we are clearly in a catalyst driven week. Your thoughts?
Finance stocks tend to not move very much for their earnings. JP Morgan, is like perpetually overpriced for their earnings. I don't understand how people people still buy and sell calls as if they know what's going to happen, and it's always the same. It's even if it does react, it reacts and then comes back. I think Citi is the only one here that actually moves from their earnings. TSM does too, but what is this sci-fi? Is that the TV channel?
Which one?
First earnings.
Oh yeah, I don't know. I saw that. I had a note to look it up who this company is, and I just forgot about it.
Who are these people? Who are they?
Just because to show you, there's a lot of companies in the world that you've probably never heard of.
Well, they're probably like, I got a really good idea for some publicity. Let's be the first to release our earnings.
Yeah. On a Monday, man.
On a Monday morning. Everybody wakes up and they're like, oh, we got earnings. Rise and shine. When I'm looking at this, it's just finance earnings don't usually move even their own stock very much. I think everybody kind of has a good idea already of what they're looking at. There's enough Fed data out there, FRED from the St. Louis Fed. There's enough data out there that people kind of look at it and they're like, you kind of already know what's going on.
Yeah, well, I think the bigger news of the week so far, and it occurred last night, was the whole Trump Powell DOJ indictment, right? So that was definitely a market mover overnight. We broke, we were kind of teetering. We were talking about this pre-show, but we were teetering around the 6950 SPX overnight. And then at about, I think between 7 or 8 p.m. Eastern time, this news came out, which was, the Fed and Powell received an indictment from the DOJ in relation to the new upgrades they're making to the Fed building. Powell sent out so that was Friday, they got that. And then last night, Powell came out with a video, a statement. Trump even came back later in the evening. I think he was on some interview at that time, and he fired off a couple of shots too. So, Powell's saying this is a threat, coming from, this administration because they want to move interest rates. They are going to be neutral to politics and partisanship, right? So Powell is standing ground. He's not going to move. So this is a very interesting scenario. And I think, the Supreme Court ruling got pushed back from last Friday to this Wednesday. So I'm just curious where the hell this is going. I mean, this is a soap opera in itself. Your thoughts?
Yeah. I mean, first of all, I don't see an argument that the Fed should be political, like by any means. Like the monetary policy should not be set for political motivations. I mean, that's how, Turkey got into their position. It's pretty bad. Like, that if that's the motivation here is for Trump to get monetary policy to do what he wants, which is lower interest rates to lower the debt. That's not what the function is of the Fed. So I think that Powell standing up to him is bold, and it should be done. And I don't know, ever since the Maduro thing happened, Trump seemed to be empowered. Like now all of a sudden he's spouting off about Greenland again, sending the Abraham Lincoln to the South China Sea, the big, huge aircraft carrier. All of a sudden Trump is like emboldened, like, oh, I can do this. So I'm personally kind of scared. I mean, what's going to happen next? I mean, now it is, from a market standpoint only, even it has opened up the door to the unexpected catalyst, which is now going to be the fear all the time. The unexpected catalyst is like if dealers price that in, which I think they are, but if dealers are pricing that in, that means that skew will always be higher, and any kind of bullish push from Vanna is going to be larger. I mean, now that assumes that there's hedging, which there isn't enough hedging now for me to be concerned with this, but that means that Vanna push will be stronger. But it also means that anything can just spike the market. So that means volatility is the name of the game.
It is. And no, I mean, I'm with you. And then you add in earnings coming in this week, right? Or over the next month, I should say. This is going to be an interesting month. I think, February is not going to be for the week. Let me just leave it at that.
Yeah, February OPEX, I don't think is going to be an easy trading environment. But I do think that for the rest of January, assuming there's no like strong catalyst or something, I think the rest of January should probably be pretty range bound. But that's just, that's my take. We could look at your trade plan.
Yeah, let's jump in there and take a look at that. So kind of coming into the overnight session, there's a few key levels that I was looking at, and then we can jump into Volland here. So the first was the 6950, 6960 support level. That obviously did not hold, and then we have resistance at 6975. So below that, I had essentially, let me go down here. This is where I wanted to go. 69.25 was a key level there. If that broke, you had another 25 points that we could have easily captured in the overnight session, but it held as expected. Even went down to 69.20 to be exact. So my expectation is between this zone here, the 69.20, 6900, it should hold at least for the time being until we have an event catalyst that pulls price there. But I also just don't see a lot of upside. I mean, there's intraday today, I think we were thinking, hey, do we swing back and even positively close up? I doubt that, but as we're I'm waiting here to look at some of the updated 0DT data here, but for me, the line in the sand really comes down to this zone on the week here. And I think on the upside, you get through 75, there's a good chance you're getting to 7,000, right? And so for me, these are the key levels. I'm watching what I'll be trading through. My bias for the week is, so far mean reversion. That's kind of the theme of it, right? And we're in an OPEX kind of week here. So we broke below 69.50. We need to take that back, right? Otherwise, there's going to be a little bit more pressure from the bears here. So that's what I'm going to look for intraday is that, we push out of 69.25 here overnight back towards 69.50. And then there'll probably be a reckoning that will occur at that point in time. But I'll quickly pause. I'll go into Volland here, but your thoughts as well, Wiz.
No, I agree. I think, you see there's a lot of zigzags here, but they're relatively small. And I think that 7,000 right there, and even maybe a little bit above, that's going to be very strong that's a strong resistance.
Yeah.
And that's also kind of, the way I like to trade is I like to identify what risk am I willing to take. And for me, it's that 7,000. We're not going to crawl above that. That's my spot. But
yeah, even here. Yeah, this is all expiration. It was interesting that even some of the above 69.50 here, like you're still kind of barely teetering positive. And then above 69.50, you just get negative beta, right? So there's definitely a risk. And we saw that last night, right? Last night was a prime example of this where you get in a volatility shock, like the Powell statement and indictment, right? And then you'll see what happens with the market really, really quickly there. So that continues to be the game. And I think if we look at even gamma here, I'd love to get your thoughts, but there's a lot of positive gamma, so some structure there. But this all comes down to dealers, whether they're willing to, move or not the market here. And you can see here clearly that 25 level held overnight. It's going to be an important level. And do we push back up through these positive gamma levels? That's essentially what we're looking for here, right? And then as you try to get back up above 69.50, you're starting to enter negative gamma. So, it's not to say that it can't go through there, but it's going to be messy and choppy and, not exactly a straight line up as well. But any thoughts on gamma as well?
Yeah, I agree. And I think that, above that 69.50, you can make a really quick run, kind of like we did on Friday, right? We got above, 69.50. I think I said it was 69.40. As soon as we got above that 69.40, it wasn't, in 2 minutes, but it was, just ratcheted up. I kept ratcheting it up all the way up to like 69.75, and then kind of had the rug pulled a little bit. I guess, I don't know, somebody may have known something. You said,
well, it was pretty odd that we hit 75. I thought we were going to push a little, we were like a couple points shy, even maybe from above 75, that is. So I thought, okay, they're going to take it to 7K at this point, right? And it was interesting when they dropped it. It felt like, based on the news articles, there's a correlation there.
Yeah.
Last Friday.
Yeah, somebody sold out, but but yeah, and if that large positive gamma does get broken, then we could see ourselves kind of progressively drop. It won't be a strong vol event drop. It shouldn't be anyway, but it should push just kind of slowly to the downside. I think I talked a little bit last week in my Substack about how the the skew was so overpriced based on like the historical spot vol correlation, which, you know, skew is supposed to be in line with that. And I was like, it's at 0.9 vol points versus 0.56. I'm like, that's a lot. I thought it was for jobs data, but it still exists. And I guess that, you know, this is why I'm thinking there's going to be this Trump unexpected catalyst premium now in the market all the time. It's there now. It wouldn't surprise me if it just stays.
Yeah, well,
Making
especially
puts very
this year.
expensive. Make puts
Well,
expensive again.
yeah, well, especially this year with a bunch of uncertainty, right? Like you typically have that uncertainty going into the second year of a new term, right?
Yeah.
Especially midterm elections are going to be coming up. This year is just full of a lot of weird stuff that will go on, like this
Yeah.
Powell indictment as an example. So my only, especially if you're an intraday trader, this is why I keep saying this for the past year. You have to just trade level to level, right? Your bias should be from one level to the next level, not from a zone to zone, because some zones are either we hit them in hours or they take weeks potentially to get there, right?
Yeah.
So there's just not a, and then because of the volatility, especially if you get that crushed, those premiums start to come down, or you get the volatility that goes up, the premiums go up. If you're on the wrong side of that transition, your premium decay is real, right? So I keep telling anyone who messages me, like, intraday traders go level to level, reassess. Again, same thing, rinse and repeat.
Yeah. Yeah. But there isn't that many puts being bought. Like it isn't as bad as when we had the no puts bought, you know, regime of, you know, I guess last year. But it's not, you know, if it looks like there's a lot of support, but it's only 200 million in Vanna.
Yeah.
You know, like, you know, I'm
just
kind
nothing.
of,
I mean, you would like for something like this closer to price.
well, I think 6,000 probably, yeah, something like that closer to price would be best. Something like, but then if you zoom out a little bit, out being back,
Yep, sorry,
and
yep,
that
yep.
5,000 there, they're like, you know, it's like a huge sold put vertical. But yeah, or I guess long put vertical. But yeah, so I look at this and I'm just kind of you know, at some point in time, all that negative Vanna, which are people selling puts, is going to be, you know, we're gonna meet those. So we'll see. But yeah, in January, only having like 400 million right now for OPEX in Vanna, that's not a lot. And February is not much better. So if you look at the February OPEX, that's pretty sparse too. I mean, I still have to do a full analysis on February, so I haven't like released anything yet. But you could just go to relative third value. Yeah, but you see that in February.
I haven't looked at it. I haven't even turned it on in my workspace, obviously. But good God, that ain't looking so hot.
That's a lot of people who bought calls and are selling puts, and that's the opposite of Jack. So I mean, when I saw that, I'm like, you know, if you have any bullish positions on, you might want to be tapering down a little bit now.
Yeah. Oh, wow. Okay, I just made a note to myself to look into the February OPEX closely tonight, so I can switch this back for now. But
Yeah.
all right, what
Great.
questions do we have, Wiz?
No, we don't have any questions right now. Yeah, so it's just here's the okay. All right, so just we have one question. Basically, it is, can you guys walk through what made us say whoa?
Let me go
Can
back.
you open up one of these January cumulative charts?
Yeah, January. This one's fine.
Yeah.
All right, here we go.
This is the normal look for Volland, right? This is when customers are buying puts, selling calls, and then buying, you know, we don't see it in Volland, but buying the underlying, right? And that is a bullish look. And we just kind of progressively go up. Normally, we see the put level flatten out and around like the 1 billion area, especially on an OPEX week. It's like 1 to 2 billion. It's only 200 million, so we're kind of, it's a little range bound. I'm not going to get too excessive. Same thing on the call side. It usually goes up to maybe 500 million to a billion. A lot of sold calls, especially as we get closer to resistance. The thing that made us go whoa is if you can now go to the February OPEX.
Yep. 1 second. I had it and then I flipped it over. So
Yeah,
1
like
minute.
remember, I just said I normally like to see the positive Vanna below and above. That means customers are buying puts. This made us say, whoa, is people are now buying calls and selling puts. And that usually is associated with people selling on their portfolio. So they're kind of like, in general, kind of trying to hedge for January. February, not trying to hedge. They're like releasing all their hedges. And there's, it's a lot of bought calls. So I'm kind of waiting because a lot of times there could be some rolling, some of the January hedging could roll to February, which is usually what happens. But it usually has happened already. Usually it would have happened last week and it has not yet. So I look at this and I'm kind of, kind of get a little dicey, it gets a little dicey here.
Yeah. I'm curious how by the end of this week, how this view changes. So definitely one that I would be watching to see how positions, if they adjust, if they adjust.
Another thing though that I did want to bring up, since we do have a little bit of time and not a lot of questions, bring up zero DTE delta decay. I want to show everybody what this is all about.
I was just going to ask you about that too. Do you want puts and calls or separated? Perfect.
Basically, this is like a look at what we got kind of thing.
Do you want the exposure or the strikes?
Exposure or the strike? Oh, no, that's fine. What you had up is fine.
Okay.
So we decided, one of the hardest things we were trying to solve especially in our kind of prior Volland version, is in the zero DTE tenor. How do we accurately show the notional that dealers have to hedge, right? Like, how do you accurately show it when because charm is related to 1 day? We tried to shorten that time frame, right? To intraday charm to try to get to expiration, right? But it's still, even with like 1 second left and 2 strikes that have charm on it, it's still way too much. Like, dealers aren't going to be buying 25 billion or 50 billion. And we just after talking a little bit internally, we basically did this zero DTE delta decay. And what this is zero DTE delta exposure, but using the principles of Vanna and charm to show exactly how much dealers have to hedge by the end of the day. Not saying that they are not hedged there, but we've seen a remarkable time series correlation intraday with the zero DTE delta decay. So this is what we're looking at is current zero DTE delta exposure, but with the signs showing how much dealers are holding. So how much actually have to decay. I know you kind of look at this and you're like, do I have to add up each of these bars, right? Like these minus bars would be bullish, kind of like charm, and the green bars would be bearish, also kind of like charm. So what do? You kind of add up all these numbers. Go to the zero DTE widget real quick, Jay.
Yep, 1 second. This one here?
Yep. And there you go. Don't have to add them up. We do it for you right there. 1.3 billion positive. That's how much they have to hedge for today for now.
Yep.
It also, another major advantage to this, other than actually having the correct notional that they have to hedge, the other advantage is this takes into account all of the options that are currently being traded. So when you see large changes in the delta decay, usually that means there's a large position that has been put on or taken off. And and like that immediate, since now we have 2-minute updates, all of a sudden that becomes relevant, because if a large position was put on, then that delta has to be hedged right away. We catch that in time. So yeah, this is the best way to visualize exactly how much dealers have to hedge before the end of the day. And combined with that daily delta hedging, I'm primarily a swing trader. You are an intraday trader, so you could tell me, how valuable is it?
I mean, it was extremely valuable. I looked at it like for, when the first day that you guys brought it out, and I'm obviously learning it. I kind of built a system, at least in my head, I think I have. Like for me, the high delta is you're north of like $4 billion, right? Something that is medium wise delta is about $2 to $4 billion, and then low delta is below, 2 billion here. I'm still trying to like compare the numbers, just look at it, and see how it is.
I can help you
Yes.
with this.
Beautiful.
There's a study that was done. I don't think it was SIBO. It was I think it was an academic paper. But the rule of thumb that I've been using since I read that paper is $25 billion is 1% movement in SPX.
Yeah. Okay.
So if you see 1.7 billion, that's like 1/25th. So it's like, 0.04 or whatever percent movement. I guess 1 billion. Yeah, I guess 1 billion would be like point. What is like I guess it would be like point, not 0.25. What is that? Like 0.04, right?
Yeah. Yep.
Yeah, like 0.04%, 0.05%, which is not something to sneeze at. I mean, that's a couple points, that's several points. By the end of the day, like on Friday, when we kept going up and up and up, that number was up to like 18, 19 billion, right?
Wow. Yeah.
It got up that high, and then it kind of tailed off toward the end. And that's when we knew this is, I knew, really it's kind of Hunter and myself. We were talking, we're like, the delta decay is tailing off. Let's see if we tail off at the end of the day. And we did. It was kind of, it was pretty remarkable. So that is, and that's not to say like 19 billion. If you see 19 billion on there, dealers might have already hedged some of that. So you can't take that at face value, especially like when you see 1.7 billion to start the day. That's probably already hedged, because, that's existing positioning as well. But, it's still, if you see that and then it goes up to 4 or 5 billion, which is usual, by noon, you're like, oh, that's a bullish push, right?
Yeah. That makes sense.
So yeah, I mean, so there is a little bit of art to seeing like when the dealers will hedge the full, the full amount. But regardless, I mean, it's other than if you saw exactly how many shares the dealers were holding, which you don't know. I don't know if that's even possible to know unless you know exactly that. This is probably as close to knowing what the dealer book is on a 0 DTE basis that you could get.
I agree with you.
So
thanks for that reminder.
DTE traders out there, take note, right?
Well, and I think like this one clearly showed, 69.25 was a level to be dealt with, right? And I know we popped maybe like 5 or 10 points from that zone in overnight session. That's also liquidity there. You have to wait for those buyers, and buyers came, right? So it just takes them a while to buy. This is not insta buy here.
Yeah.
So yeah.
Really quick, we do have a question from Johannes. Do I think there's delta decay in the further term options in the wings? Yes, but probably not as critical, because that is going to decay a lot slower. Because he's talking about further term options as in like tomorrow or, out there. So yes, but I think that Vanna is a better measure of it, because they're kind of hold that volatility until the very end. So,
Yeah,
Roger
Roger
asked, so
also
it's
had.
more about, hey, nice piece of toast. Need some butter on that, bud.
Looks delicious. Nice and golden.
Yeah, I know.
It's like a
I've
good,
never.
it's like a good toast, color there. Is
So
it
it's more about,
AI? Is that an AI photo of a
yeah,
toast?
that's the only possible explanation. I've never gotten toast that perfect. Um, so it's more about watching how the delta decay changes throughout the day rather than the raw numbers themselves. I think both matter. But I mean, so the answer is yes, both matter. But it's, I guess the changes would be a little bit more potent of a like immediate move. Like if you're scalping or something like that, the changes are what you want. Yeah, see, look at that. The delta flip there as we were watching, right? Because
Yeah.
I guess we're bouncing below and above 6930 or something.
We are literally teetering right in between these two
So I mean,
bars.
it's using these like principles to kind of hit that. But yeah. So I mean, but the funny thing is, 6930 is the difference between, like, if the market, if it's at 69 29 99 and that's where we close, that option is a 1 delta. If it's at 69 30.01, then that closes at 0 delta. So you kind of have to take that into account, of where the delta is going. That's what we did here with 0 DTE delta decay. Yeah, Johannes asked if delta decay is out in the further terms. I mean, Vanna is probably a better measure of, because that is IV turning into delta. And that's what at Vanna rate, right? So that's what we do for swing trading. It's been working out pretty well for us. So, yeah, that's what I just kind of wanted to highlight this new feature, because there's a lot of 0 DTE traders out there. It's a lot of charlatans selling you 0 DTE junk, and I wanted to show, we are working on getting you better tools, and this one is a golden one. This is something that you should that I wanted to highlight. So
Yeah, I'm super excited for this one. Still, I'm not gonna blast here saying I've traded this for 10 trading sessions and I use it this way. So I've added this effectively once it came out last week, right? So I'm looking forward to testing this, strategizing it, and how I insert it kind of into my day-to-day trade plan. But in theory and concept, huge item missing for a 0 DTE trader. So thank you, Wiz and Hunter and others who have built this for us. So thank you.
Yeah, we did do a video on it. Maybe Jill, if, like, after we're done, you can post it in the comments or something, an educational video on how to read this. Yeah, I mean, we go into pretty deep detail, so you're probably gonna have to watch it more than once. And it was hosted by Hunter, and he talks fast, so you're probably gonna have to watch it more than once. But hey, that gets us views, right? So like and subscribe.
Yeah, I just went ahead, or at least tried to post up. Looks like I can't post here, but I tried to post the link for the video. There we go. Thank you, Jill.
Thank you, Jill. All right. If that's it, if that's the only questions that we have, take care, everybody. Happy trading, happy OPEX, and may Volland help you in your future trading ventures.